Super Hits Radio. Joy 99.7. 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 Super Hits Radio. Joy 99.7.
99.7 FM. Also, on our social media handles, Facebook, JoyBusiness GH, and Joy 99.7 FM. Twitter, JoyBusiness GH, and Joy 99.7 FM. The hashtag is Joy Finance Forum. So please send your comments, questions to our social media handles. Now, the theme for this forum is the changing tide of Ghana's financial services sector. The cause, the cost, and the cleanup. Last year, we saw two banks, UT Bank, Capital Bank, go under. This year, we also experienced the same thing. We've seen other problems in other parts of the financial services industry. Today, we want to get into a discussion that looks at the future of the financial services industry. Like I said before, all our guests were here. The banking sector is important to this economy. It dominates. But if you look at the other sectors, the insurance sector, the capital markets, the pension sector, they seem to wane behind. Another important point that people fail to realize, that's people without the financial background, the economic background, is how interrelated they are. I made the case of what happened in the United States in 2008, when Lehman Brothers went down and AIG went down, and we saw a ripple across the world. We in Ghana didn't really feel it that much because we weren't really connected to the financial markets or to the international financial markets. But today we want to look at how Ghana's financial services system is interrelated. And beyond, for example, the Bank of Ghana's minimum capital requirements for this year, December, what happens next? What happens to the savings and loans companies? What happens to our insurance markets? The NIC, what are they doing? Securities and Exchange Commission, what's happening there? National Pensions Regulatory Authority. So we're going to focus on this, and we're going to look at where we are going to go in the future. Now, to lead our discussions, I have on our panel the Deputy Minister of Finance, Mr. Charles Edubuahin. Thank you very much for joining us. We also have Mr. Alhassan Andani. He is the President of the Ghana Bankers Association, also Managing Director, Stanbic Bank. Then we also have Madam Elsie Awaji. She's the Second Deputy Governor, Bank of Ghana. Now, we also have a panel joining us to aid in our discussions. We have Nana Otoye Champong. He's a banking consultant. Nana, thank you very much for joining us. We have Dr. Etuahene. He's the CEO of Salman Partners and Financial Consultants. Dr. Etuahene, thank you very much. We also have Mr. Ken Thompson, CEO, Dalex Finance. Mr. Ken, thank you very much. We also have Mr. Chuneba Akodua Boache. He's the Executive Secretary, Ghana Association of Savings and Loans Companies. So we're going to have a very interesting and fruitful discussion. We have our lead discussants. We have our other panel. And you, our guests, please don't be afraid to put the questions to our panel. We have the Deputy Governor here. We have the Deputy Finance Minister here. If there's anything on your mind, please share. Let's do it. And let's keep the conversation thriving and going. Thank you very much. Now, to lead this discussion is my colleague, my editor, a good friend of mine, George Rafe.
Hello. All right, thank you so much, Philip, for that brief introduction. Yes, so it's all about development in the financial sector. After those regulatory cleanups that we've seen, Bank of Ghana, National Insurance Commission, and also the other sector capital market, what is next in terms of regulation? What are we going to see going forward? And these are the things that we're going to do in today. But before I go ahead with the whole discussion and all the rest, I would ask our lead panelist here to give us some brief open remarks. We can start first with the Deputy Minister of Finance in terms of policy outlook. What should we be expecting in terms of going forward? After all these regulatory measures, reforms have taken place, going into 2019, what should we be expecting from government in terms of the environment for the financial sector? So let's welcome the Deputy Minister of Finance, Charles Dubois, to give his open remark, please. Thank you. Let's do some love for him.
Thank you very much, George, and greetings to all invited guests and to fellow panelists. I end up doing these things usually because my minister is out somewhere traveling, so he sends his apologies. As you know, he comes from the sector and he's always very keen to be involved. So I'll try and, step up to the plate, and I hope I can do a decent job of it. We are very focused on providing or ensuring that we have a stable, solid financial sector. That is fundamental to any kind of program or growth that we plan in this economy. We all know the kind of situation we inherited, and the depth of the problems that were there, and what we needed to do to clean it up. It is clear that without cleaning it up, we can't ever restart the economy in terms of from the financial sector perspective. And the introduction or the availability of credit to really spur private sector growth, which is fundamental. So what we have to do, and you can't sort of paper up or sort of try and just cover up all the debt and the toxicity, expecting it to just disappear, which was what the previous government was trying to do, just kicking the ball further and further downfield or upfield. And we've decided to confront the problem and confront it decisively and, clean it up so that we can set the platform for the sustained growth that we are putting in place, the building blocks to do. So you've seen all that has transpired. You've seen what we've done so far. There's still a couple more things to get done. Hopefully we'll get it all sorted by the end of the year, and we'll face 2019 resilient and strong to be able to, drive the economy forward. Really and truly, there has been a drying up of credits in the private sector. And that is a big problem because we can't drive the job creation. Government cannot be the sole provider of jobs. We have to make sure that the private sector steps in and plays a role. And for private sector to do that, they should be able to access funds and capital to be able to grow their business and invest and grow the economy. And so it's fundamental that the financial sector plays that role. We've also have to consider and put in place the measures to be able to absorb or adapt to the new ways of doing business, the digitalization of the economy, the fintechs. Nowadays, there's a company that has provided or issued 1 million loans in the last year. And they've done that all via mobile money platform. They've tended to 1 million unique customers in 12 months. They've issued over, I think, 4.6 million loans in that duration. That comes up to about 400,000 loans a month. There's no way you could do that out of a brick and mortar sitting in Mamobi. This was done all online platform. So day, night, 24 hours, people are accessing the platform, asking for loans. Their credit is being evaluated. They are scored on their credit, and a loan is made available to them. They have a loan book now in excess of 700 million CDs. And so that just tells you where the market is going. So now you can do your microfinance and microcredit via these kind of platforms, which requires very few bricks and mortars, and still be able to maintain an NPL ratio of under 10%. And we need to put in place the systems and the regulations to be able to guide this kind of new ways of putting credit into the system. So those are some of the policies that we are very keen to support and encourage. We're also very keen to support issues about setting up a credit rating agency so that people can start pricing their loans appropriately, and also depositors can make an informed decision. They have another sort of evaluation point to be able to determine the risk, or evaluate banks and other institutions, deposit-taking institutions, to know exactly, So if you go and put your money in a C-rated or a B- rated bank or savings and loans, yeah, you might get a higher amount in interest payments, but if something happens, you know that you took the risk and this is the price you pay for it. Vis-a-vis a AAA rated bank where you might get a lower interest payment on your savings deposit, but at least you can sleep better at night. So those are the trade-offs that need to be properly quantified and priced, so that then we have a much more robust system. So that's one thing that we are really keen to do. Also, we really need to strengthen the corporate governance issues. We've announced the capitalization requirements, which I think is another very important aspect of it. We're looking at the SEC and those regulations, and to see how we can tighten them. I think this whole men's gold debacle has showed us that always new products come up, which the regulations might not be able to address, and you don't even know where they sit and which supervisory authority do they fall. So we have to, put in place some kind of sandbox type of regulations that is a catch-all for some of these institutions that are coming up. Blockchain is another one. Now you have like blockchain type businesses and people trading in blockchain. Some of us don't even understand what it's all about, but it's big business. People claim they've made millions from blockchain. But so we have to make sure that we keep up with the change in this whole space, and that we allow the system to thrive. Another thing is we are passing the payments bill, which I think is in Parliament now, which should then sort of help govern the whole sort of fintech digital payments system, that I think will really be helpful in opening up that market and being able to regulate it properly. So we also established the Financial Stability Council and its Financial Services Data Center. And these are some of the things that we are doing. I'm sure as we go on and we continue with the discussion, other things will come up and we'll talk about them. Thank you.
Thank you very much. Shows my appreciation for Mr. Charles Dubois-Hin, is Deputy Minister of Finance, setting the framework in terms of the policy direction going into next year and what we should expect. This is the Joy Business Financial Services Forum, when we are looking at the changing tide of Ghana's financial sector, the cost, and the cleanup. And we are asking ourselves, after the cleanup, what next in terms of regulation, in terms of policy? What should we be expecting next year? There's talk about IFRS 9. How does it impact on these commercial banks? How would it impact on your business as well? All these things are here. And you can join us in this conversation as hashtag the Joy Finance Forum. And you can also do that on our various social media platforms. On Facebook as Joy Business GH, and also Joy 997 FM. On Twitter as Joy Business GH at Joy 997 FM. And also you can send your comments as well on our social media platforms. And also remember to hashtag Joy Finance Forum. Let me bring in a player in the industry, a critical player in this industry when it comes to the commercial banks. Mr. Hassan Andani is president of the Ghana Association of Bankers. Let me have your initial comments.
Thank you very much. I was just saying that the governor should have spoken before me before she takes away my license. You know, for us in the financial services sector or banking, you know, we look at mainly four constituents. One is the government, and, you know, every business thrives in growth, and governments have the bigger framework for growth. GDP levers and GDP growth rates. Basically inflation, which is the starting point for prices. And government is also a big player in the sector, either through its own procurements of products and services, and also through the activities of state-owned enterprises. Government is also a big borrower in the market, apart from inflation. They set the benchmark prices, you know, and in modern finance, governments are said to be riskless, and therefore, if they set up a base in terms of lending, it doesn't make, or borrowing, it doesn't make sense for any lender to operate below. So there's all this conundrum of activities that we expect from the government. Then, of course, we are regulated. Banks are licensed businesses with the Bank of Ghana. You go in there and tell the Bank of Ghana exactly what you want to do, and they license you within a certain framework. And we do send them on a very regular basis a whole raft of reports to guide what we do. And then, of course, is the banks ourselves, and the way we are constituted. You know, our shareholders, our directors, as internal management, and most importantly, the various sectors of the economy in which we choose to operate in, and the knowledge and skills we have to do that. Then, of course, most importantly, our client base. You know, so the activities and behaviors of our client base, all of that wraps around us. So if you want, banks are really, as I say, in the middle, absorbing everything, and therefore, it's very important that we respond appropriately to what governments do, what the regulator does, and of course what our customers do. So we are hoping in the future, of course there's a cleanup, and if you look at the current failures, it's probably not much of our customers. Our customers are actually probably at the receiving end, and we, at this stage as an industry, want to really be thankful to the Bank of Ghana and the Ministry of Finance in the manner particularly depositors have been protected. And I think that deposit protection really, really is the confidence every Ghanaian should take into the future. And the point Deputy Minister made around rating agencies and everybody choosing to do business with all operators based on rating and your appetite between risk and rating is especially what has happened to the depositors. So because banks are officially regulated and, you know, sort of supervised by the Bank of Ghana, our depositors were 100% protected. So if you have other operators in the industry who also deal with clients and they are not properly regulated, you know, so those clients probably might suffer some losses, especially on the deposit side. The middle one, which is the assets, is for the banks to take the hit. If a bank creates a bad asset and cannot recover that asset, of course, its shareholders will lose the capital that they put into the business, they will lose whatever reserve they've built in the business, and eventually probably lose the business, as we've seen with the fold-up of most of these financial institutions. So we expect to see in the future, and I'm sure the discussions will show that there'll be some rigor on the side of government to ensure that we establish, you know, very transparent pricing policies and conduct from government and its agencies in terms of the way they interact with the financial services sector. And I won't say anything for the governor because he's here. And for us, we will play by the rules. And again, the new banking law, I mean, and also the capital requirements and IFRS 9 if you look at it, people talk of just 400 million. It's not just 400 million for us. The kind of capital restrictions that will now be imposed on us to be able to intervene in the market is much, much tougher. And therefore, for any bank to really do good business, 400 million is probably the barest minimum before you can, so in the past you had capital adequacy at 10%. The Bank of Ghana is now requiring you to have a rider of 3%. You had all sorts of capital adequacy things, including your investment in software. They say you should back that out of capital. So there will be all sorts of restrictions so that you can tighten the allocation of your capital to your various risk baskets, and therefore the availability of funds to continue to create assets means that any viable bank in the future must continuously improve on its capital level and its capital management disciplines. I'll leave it at this point until the governor says that what I've said is true.
Thank you so much, Mr. Hassan. And then from the way you've spoken, I don't think that if the governor even had any intention of withdrawing your license, she's going to do that. Ladies and gentlemen, let's bring in the second deputy governor of the Bank of Ghana, Madam Elsie Awaji.
Thank you, George. And good morning to Joy FM and to all the audience here, distinguished ladies and gentlemen and members of the press. Thank you for having us at the table. This is a great opportunity for us to engage with all these important stakeholders to share more about what we're doing, what we're hoping to do, and to hear from you as well. And let me assure Mr. Ndani here that we're not, first of all, I bring you greetings from Governor Addison as well. Let me add that before I go. And he would have loved to be here, but is engaged in another equally important activity this morning. Mr. Ndani, we're not about to pull your license. And let me assure everyone here that we don't go about just pulling licenses. It's actually one of the most difficult things you would ever have to do as a regulator, because behind the license are human beings who are sometimes doing their best or sometimes aren't, but whose existence impacts many others. And so it is always a very difficult decision. But let me say that our objective at the Bank of Ghana is really to strengthen our financial system. This financial system belongs to all of us. It's your money, it's my money, it's all of our money that we work hard to earn and put a bit aside for a rainy day. And it is that same money that is used within the system to support businesses and other economic activity so that we can all see the economic growth we want to experience in this country, so that lives will be changed, so that everybody can move up the economic ladder. This really is the essence of what we're doing. What we're doing is to take stock of what has happened over the years, look at where we are and say, how can we strengthen our financial system? How can we make it more robust, more resilient, so that we can all continue to work hard and put some of our money away in order that we can earn something for the future, and in order that this economy also gets the resources needed to move forward. So what we've had to do in the recent past, over the last year and a half, has been difficult. It's been painful. But what we found as challenges that were plaguing our financial system, as a result of which we could not see the strength and the resilience that we wanted, had to be addressed one way or the other. There were a number of options that were open to anyone who was at the helm of affairs. The first option was do nothing and expect things to, solve, to be resolved by themselves, some way, somehow, magically, And that didn't seem to be a good option, because the problem keeps growing. And it's really like, if you would call it that, the image of a sore or a canker that's growing. If you suffered a wound and you did nothing about the wound, guess what? It would fester. It would fester. I remember growing up and having to suffer the pain of iodine and other medication to deal with the wound, because if you didn't deal with the wound, it would become something else. So one had to take very difficult decisions at that point. Do nothing was out of the question. Well, do something also had many ramifications. Do something like perhaps apply a plaster or Band-Aid. Well, the sore is bleeding, the wound is deep, but you choose not to do much apart from just apply a Band-Aid. As you know, it gets worse. And then the most difficult of all is go and see a doctor and let the doctor do something about it. Some of that could be very painful. It could even involve surgery. But what you're doing is to ring fence the problem, ring fence it at the root cause, at the root of it, so that it doesn't spread through your entire body. And in our financial system, what we've tried to do is to ring fence the problems we have found in the recent past, deal with them in as decisive a manner as possible to ensure that as bad as the situation was, it didn't spread throughout the entire system, because it could have spread and it would have been very bad. So what we did was to very quickly address and contain the problem, manage it, resolve it with intervention of the Ministry of Finance as well, bring in much needed resources so that depositors whose deposits had been at risk were made whole. And so this was really part of a package to ensure that while dealing with the problem, we were also mitigating the painful effects of the problem for the entire public. And that's what I believe we've done. We're still recovering out of that situation. It takes a while to recover, but we are doing everything to ensure that the recovery process is a short one so that we can proceed to the steady state of healthy, sound, stable, and resilient financial system. And I would speak about this as we go along. We've put in place a number of measures, some of which the Deputy Minister mentioned, some of which Mr. Ndani have mentioned, and I'll hopefully have opportunity to really drill down more deeply into some of them. But we're building a resilient financial system, and all stakeholders must be on board as we do this. Thank you very much.
Thank you, Madam Elsie. Let's show some appreciation for all our panelists who are here with the initial comments. They will now set the ball rolling in terms of the Joy Business Financial Services Forum. And, you can join this discussion via social media on Twitter. Remember to hashtag your comments. That is the Joy Finance Forum. Also on Facebook is Joy Business GH or Joy 997 FM. On Twitter is Joy Business GH at Joy 997 FM as well. And this discussion you're looking at, after this cleanup that is going on by the various regulators, what is next in terms of the outlook for the sector? It is not just about banking, but the whole financial services sector. And we'll be expecting the Director General of the Securities and Exchange Commission to join us as well. And also the National Insurance Commission officials will join us as well for this discussion that you're going to have. What are your thoughts? What do you think? Join us in this discussion via the various social media platform. We are live on Joy 99.7 FM and also on the Joy News channel on Multi TV, and wherever you are in the world, Honolulu or Saskatchewan, you can join in this conversation. So let's start with, again, go back to Madam Elsie Waji and find out from her, what is the state of this cleanup that is ongoing, and will this cleanup ever end?
What is the state of the cleanup? Well, we have cleaned up quite a bit. We have closed down 7 banks, ring-fenced them, taking them out of the system so that their challenges did not spread across. And what I said in the last few minutes was that we continue the recovery process out of all of that pain. We have set up a new bank, thanks to the Ministry of Finance, the Consolidated Bank Ghana, which is taking over deposits of the 5 banks recently closed. As you know, Ghana Commercial Bank had taken over deposits of the 2 banks that were closed last year. And depositors continue to have access to their funds through these 2 banks. So that's very positive. What's left is really that we get the receivers, as they've started doing, to recover whatever monies had been taken out by borrowers, by shareholders, by directors, by anybody else who has money belonging to these 7 banks, who needs to return them. Because that's how we get back what we have put into the cleanup effort. So that's ongoing. Dossiers have been prepared and handed over to IOCO and other state agencies that would then reach a decision to prosecute those who are found complicit in these failures. Civil action is being taken by the receivers. A number of administrative actions are being taken by the Bank of Ghana also to go after wrongdoers. So that's all a necessary part of the cleanup. There are other parts of the financial system that we regulate in addition to banks, and these are the savings and loans, finance houses, microfinance institutions, rural and community banks, which are under very strong scrutiny from us at this point. And we have already said that a few of them, some of them would have to be closed. And we have all seen instances of some of them not being able to pay out the depositors. That's not a situation anybody wants to live with for too long. It takes time to plan out actions against institutions like that. And so that process is ongoing. And in the meanwhile, we continue to assure all depositors and the public at large that deposits are safe. We're doing everything we can to ensure that we take out distressed institutions that have not been able to recover out of the system, and to make sure that depositors are made whole and that the rest of the financial system continues to grow stronger than ever before.
The states and whether this cleanup is completed or is work in progress. Now, in cleanup, do we still have more cleanup to do, or all these banks are safe and sound?
We're talking about banks? You mean the remaining banks?
Yeah.
The remaining banks, as we keep saying, the industry as a whole is stronger than ever. We're seeing profits going up. We're seeing total assets go up. We're seeing more lending. We're seeing NPLs drop. So the industry as a whole is much stronger than ever. The capital adequacy ratio, which is the measure of solvency of banks, for example, has gone up to an average of 19%. Compared to the minimum required of 10%. So we're seeing a lot of good things, also as part of, as a result of the measures we've taken to clean up. So the industry is stronger than ever. There are a few that we continue to monitor. Those who are trying to merge before December, for example, we're following them closely to make sure that the plans to merge are on course and that they don't pull a surprise at the last minute. So we continue to monitor every bank, as every regulator should do. And that's a continuing journey. But I can safely say that the industry as a whole is strong. And between now and the rest of the year, we're continuing to make sure that everybody meets the new minimum capital of 400 million as a minimum, as Mr. Ndani said. That's not the ultimate goal. It's a minimum. And then those who cannot do it by themselves join forces with others so that by the end of the year, they're in a better shape.
Thank you very much. That was Madam El-Siwaji, Deputy Governor of the Bank of Ghana. Thank you for those initial comments there. Let me move to government in terms of policy. Mr. Dubois, how committed is government to this cleanup in terms of supporting the Bank of Ghana with respect to some regulatory measures that they have to take? Not just about the funds as well, but buying into the fact that if I want Mr. Ndani's bank to go down, government wouldn't come and say that, no, hold on to Mr. Ndani's bank because it's my friend. These are just for scenarios. Don't worry. Go ahead.
I don't know how much more committed you can get than writing a check for almost 10 billion cedis. I think that shows how committed we are to the process. And I think some of the banks that we've had to closed down had some very powerful shareholders. And so clearly the political will is there. And, you know, it's either you do it and you do it properly, or you do it haphazardly and it will come back to haunt you. So we are really determined and focused to clean up the sector. I mean, fortunately, of the four of us at the Ministry of Finance, two of us were in sort of the banking industry. And so it was not too long ago that we were on the other side. And so we appreciate and understand what it takes to get the financial sector on solid ground and vibrant, and being the sort of the oil that oils the economy, as you said in your write-up. So I don't think there's any doubt about the level of commitment that we have to see this through and ensure that it's done well and properly. We are in constant communication and discussion with the Bank of Ghana. I must take off my hat to them for being just as committed and focused on getting this done. You can imagine the kind of pressure they are under. But we are all going to stay the course. There's no doubt about it. So yes, I think that should assure you. On the other hand, we are also very committed and recognize the importance of keeping depositors safe. And we've passed the Deposit Protection Act, which will be enforced as soon as we've cleaned this thing up, so we can start from a clean slate, and that will then, going forward, provide depositors with some kind of cover, or at least protect their downside to a limited extent. And that's jointly with the credit rating should help them make more informed and better decisions. We're also very committed to the protection of jobs. A lot of people, because we've stepped in and resolved these issues, cannot imagine what the alternative would have been. But the alternative could have been really dire. You could have had all these banks, which were all technically insolvent, really close their doors. They had kept sort of trying to delay the problem, but sooner or later, the Pied Piper would have, sang a tune, and they would have been shut down. And, one day all these workers would have dressed up to go to work and would have gotten there, and the bank would be closed. And they'll be home without a severance package, without no sort of advance warning, and just jobless, and depositors would have faced a similar fate. So really and truly, our intervention was the best solution given the alternatives, where what was of utmost priority was the interest of the depositors and of the employees. Even with the creation of CBG, we looked at how we could really reduce the operating expenses and other areas of operating expenses with the least amount of damage or laying off possible. So what we looked at initially was the people that were on a service contract, like contracted workers, which was mainly in businesses that the bank shareholders had outsourced to related parties, like the provision of security, provision of catering. Even sometimes there was a company that did the hiring and then turned around and sublet the people they had hired to the bank, So, it was all kinds of things. So those are the people that we looked at first and managed to find ways to reduce the operational expenses to allow us to maintain and extend the employment period for the workers. So initially when we thought that we would have to start, reducing the headcount after 2 months, we've now been able to extend that and give people additional relief, and so that they can have more time to find other alternatives and maybe even end up keeping their jobs. Because, of course, if they turn out to be productive and increase the productivity, that would generate more income for the bank, which in turn will mean that they'll be allowed to have a bigger workforce. So I don't think their commitment is undoubted. We stand firmly behind them.
You talked about signing a check of about 10 billion Ghana cedis. I stand to be corrected on that one. But as a father of the house, when are you going to say that, okay, well, let's stop here? Prudent expenditure to ensure that these funds are going to areas that they are really needed, and not the fact that, Father, I come to you, I need check, keep on signing for me. Yeah. These are state funds. These are taxpayers' money. Yeah.
No, and it's money that we don't actually have. So definitely, you can't create money out of nothing, you know. And prudent expenditure is the number one fundamental objective with regards to how we went about this. And you know, you have to ask yourself what will happen if you don't do it, you know, and what the cost of that will be. And that will then inform what your definition of prudence is, you know. And we've weighed the odds, and we've weighed the different outcomes, and this was the best use of taxpayers' money in these circumstances, you know. And as the leaders here and the people in charge, we are totally responsible for these actions we take. You know, sometimes I get up in the middle of the night and I'm imagining government changes, and Yoko has called me, and I'm sitting there all day trying to explain why we did it. So we did.
So you're also called by Yoko?
Pardon?
You're also called by Yoko? As a deputy minister?
No, I'm not. But I'm saying that if the government changes 3 years down the line, I might be called to come to Yoko to explain what we did. You know, so these are huge responsibilities that we have undertaken, and trust me, there's very careful consideration before we took the steps we took. The fiscal pressure is going to be enormous. This is going to generate additional interest expense over the next couple of years, or in the medium term. That will additionally impact the fiscal. Being under the IMF program also was an issue, because we have certain targets that we had to meet. And so whatever we did had to be within all these barriers and boundaries. Thank you.
Let me bring in a last one, Danny. And for you as a player in this industry, are you sometimes also worried that this cleanup is too fast? I mean, I can clean this floor for about 2 hours. I've used about 2 minutes to do that. Are you worried?
Look, I think probably the general public is seeing the cleanup in the closure of the banks, but that's not when it started. This whole process started quite a time ago. And the structure of the banks and the capital restrictions or solvency problems we had to be dealt with first. So, you know, government took the bull by the horns and dealt with all the debt crises that were sitting in respect of power, in respect of oil and gas. I mean, the petroleum sector, where Ghanaians were enjoying subsidies for electricity and fuel, and those subsidies were sitting as unpaid loans and advances on the books of VRA, ECG, GradeCo, the BDCs. And what you haven't seen is the amount of money that has been raised to take care of all of that. Now, then back to the point the Deputy Governor made on the rule of thumb, 20% of the banks control over 80% of the loans and advances of this country. And those banks are absolutely safe. I mean, if we use a 20% rule, 20% of the banks control over 80% of the loans and advances. It's absolutely safe. They are nowhere close to having the kind of solvency or the liquidity problems that some of our colleagues suffered. And again, the points around what the Deputy Minister said, we all run different business modules, even though you stay on the central cost of deposit taking and creating loans and advances and doing payments, local, international. There are other business modules that people tag onto those businesses, and those business modules could have been the causes of this. So I think in terms of whether it was quick or too slow, I'm not sure. The issue the Deputy Governor made is about, look, the soil is bleeding, let us stop it. And again, the severity of it would only be known to the regulator. So we are, in fact, if you ask me, the first was Capital and I think UT. And when we saw that there was 100% deposit underwrite, I mean, the association went straight to meet the governor just so that we understood the complexity of it. And to the point made by both the Deputy Governor and government was prepared to go the whole hog, because the fear was, if other banks suffered the same or were to come under the same pressure, would you give 100% depositor support? And the answer was firmly yes. So for me, the speed and all, The slowness was not important. What was important for us as banks is our customers. We could be held responsible for whatever loans and advances we've created, but our customers cannot be held responsible for having the confidence in us, in giving us those deposits, and also relying on our regulator and government to protect them and being let down. So the fact that we went over that hurdle, and that was the baseline on which they operated, I think meant that we had to cooperate with whatever measures in sure that we had a cleanup.
I'll come again to you, Mr. Ndani, because the bit about confidence, and do you think that this cleanup, the approach itself, has helped in confidence in the sector, the banks themselves, and even the entire financial system? Some have argued that maybe the approach could have been different.
No, for us, you see, is it not this famous musician who says Sekeya Moja, right? So the continued flow of deposits into the banking sector was the critical thing. And to the extent that, I tell you, I had a friend in one of the banks that took that one of the, I think it was PwC that went to take over Capital Bank. So all of us had been put on notice in terms of customers coming and wanting all of their deposits. And they were surprised. They were in the foyer, very strange people taking over the bank. And customers came and asked, what's happening here? Oh, the Bank of Ghana is taking over this bank. And they expected customers to go out with their money. They didn't. They actually went and deposited money. This only happens in Ghana, right? They didn't run out with their money. So to the extent that the customers are still confident and leaving money in the banks is very important. In fact, and the problem our sister organizations are facing in the loans and deposit area is because of the spook. Customers aren't bringing money. And they've created assets out of these earlier deposits that they had. So if there's no continuous flow to refresh and to recover and circulate, it's only running down. So for us, in the financial services sector, the action of government to give depositors the confidence that they are 100% protected made sure that this money continued to come through, whilst we even created more loans, because we could have just frozen and said, I won't create any more loans. What if I create a one-year loan and the deposit against which I created, it comes in next week to take it? But because of that assurance of the continuous flow of deposits, we continue to do business.
Thank you very much, Mr. Hassan. And then if you've just joined us, this is the Joy Business Financial Services Forum. We're coming to you live from Goodin Chilip Hotel, and it's live on Joy 99.7 FM and also on the Joy News channel on Multi TV. You can join in this conversation in terms of the outlook for the whole financial services sector, not just banks, but talk about insurance companies, talk about pension companies, pension fund managers, and all the players in the capital markets. Are you that optimistic looking at what our regulators and the government has said with respect to the outlook for the financial sector? Join us in this conversation. Remember to hashtag your comments with Joy Finance Forum. It's on Facebook as Joy Business GH, or Joy 997 FM. On Twitter, it's Joy Business GH or Joy 997 FM. And also for all the various social media platforms, you can join us with your comments. Are you convinced by government's assurance, the regulators' assurance that everything is safe and sound, or you hold a different view on that one? You can send your comments right now for us to read here. And we'll be bringing in our panelists to also hear the other stakeholders who are here with us with respect to their comments on this. And before that, I'll get one last comment from the governor, and then I'll come to our invited guest and the various interest groups from the various financial services sector. So, Madam Awaji, I wanted also to find out from you. So, in terms of the outlook, let's look at still the banks. What happens after January 1? George Yafe Bank fails to meet the capital requirement. Are you going to take that painful decision of withdrawing my license, or George, hold on, let me see what I can do to you?
George Yafe, I'm sorry to tell you that banking requires capital, serious money. So you either have enough capital in George Yafe Bank by 1st of January 2019, or we'll have to take some very painful decisions concerning George Yafe Bank. We're hoping that if you realize you don't have what it takes to do it, that you very quickly join another bank who may be looking for a partner anyway. and then don't wait until it's too late. And we're very confident that the banks will meet this new requirement. I think the governor mentioned last month at the MPC press conference that about 20 banks had met or were already there, almost there. And we have 30 banks. So the rest, we monitor on a daily basis. We're meeting with them to say, tell us where you are in terms of your capital raising plans or whatever else you're doing. And we're very confident that they're going to meet it. If for some reason they won't meet it and will not merge, well, that's another matter altogether. But we cannot allow banks that are not well capitalized to remain in the system after January 1st. Deposits are the most important part of our banking sector, as you've heard from everyone. Deposits come into banks where depositors are confident that their deposits will be kept safe. If you had money and wanted to give it to me to keep for you, I'm sure you want to make sure that I'm not going to spend your money and that I'm going to keep it well. And if for any reason I put your money somewhere and I can get it back, when you came back, I could sell an asset of mine to pay you back. That's really the same thing about banks. We want to make sure that given where the economy is and is going, we have banks that are well positioned to be able to take your money and do the business that they're licensed to do. And that's really what we're saying. We see exciting opportunities in our economy going forward, a lot of growth opportunities. Banks must be well positioned to use the deposits that they take to do business, but they need to provide capital buffers, cushions of their own capital, so that they can absorb the risks that come from the wider economy, from other institutions, and the risks that they introduce into the system themselves through their own behavior. They must have capital to cushion all of that so that your money and my money will be safe with them.
You talked about not being taken by surprises, and I know. When would you make that final call? When I keep again making excuses, oh, I'm expecting some money from some offshore investors. They're coming in from Cayman Islands. This person is bringing this year. I'll bring different papers to you, and every day I'm bringing a new thing. Would it be that by November 31 or November 30, if Georgia Bank is finding excuses, you make a call that, okay, I'm sorry, I'm not going to be taken up by any surprises? A clear date for that one?
Well, the end of the year.
All right. Thank you.
It's as simple as that. We made that very clear from day one. 31st December 2018 is when we expect Georgia Bank, if it exists, to have shown us that indeed it has the capital. And we won't even just take the papers that your people bring from the Cayman Islands. We put in place a capital verification process, a very stringent one, to ensure that we can go behind the numbers and the people and the faces, known and unknown, to ensure that indeed the capital is there. It's good quality capital, and it's from people that are fit and proper.
Let me bring you in, because when you also engage some of these banks, as you talk about capital requirements and meeting them, some of them are saying that you owe me. If you have paid me, if you paid me earlier, maybe I won't get to that stage of the doctor pulling the plugs on me. Life support.
Yeah. Actually, the you owe me thing cannot be used to show up your capital. So that's not the issue. It only comes into play if you're insolvent. Okay. That's one. And also, I just wanted to say with regards to what Deputy Governor said, that there's also the option that George Weah Bank can decide to downsize to a savings and loans. Don't forget that. So it's not the end of the world. Come December 31st, you can look at yourself and say, maybe I'm better off being a savings and loans. And then you go trade in your universal banking license for a savings and loans license and go and quietly sit down and do your business.
But I wanted to be a universal bank, and that is why I went through all those rigor to acquire that license.
Exactly, but that comes with a price. If you are not prepared to pay the price, you can't be a universal bank. It's as simple as that, you know. So we need to set some rules and abide by them, you know. But once you brought up this IPC issue, it's an interesting one, because a lot of the times, first, an IPC is an interim payment certificate issued to a contractor. Typically what happens is that a contractor gets a government contract to go and build a road, so to speak. And I think before my time, government had stopped issuing mobilization, which is basically giving the contractor 10% of the contract sum, even before he's, put a pile of sand on the project, because that was being abused. If there's a contract for 50 million or 100 million, you give him 10%, 10 million. There are a lot of times when the contractor would take the 10 million and just disappear. So they stopped doing that. So what happens to that? Then the contractor would then take that contract, go to a bank and say, look, I've got this contract from government. Government is, a risk-free entity, so to speak. So based on that, advance me a loan of 10 million to be able to go and start the work. And as I get paid, I'll pay you back. Now, the bank then says, okay, fine, I'll give you this loan of 10 million to start. But on condition that every IPC you get, which is every time you present, so when the contractor starts works, he does work up to a certain point, he presents a certificate to be paid. The the government entity that oversees the project sends out a quantity surveyor to do an inspection and quantify how much work has been done, then certifies the interim payment certificate, which they then present to the Ministry of Finance to pay. Now, the payment is then made to the contractor on the certification and interim payment certificate, and the contractor then turns around and pays the money back to the bank and keeps the share that goes to them as a profit. So, and typically, if there's a bank involved, the IPC, the bank will insist that all IPCs are issued in their joint names, and so first thing, the value on the IPC might not necessarily be all the money going to the bank, because of course the contractor's margin is part of that payment certificate. So a lot of times, you get a bank saying, I have all these IPCs worth this amount. That doesn't mean all the money would have come to the bank in the first place. Secondly, a lot of times, in fact, there was one case in one bank, I won't mention the name, but let's say they had IPCs of 400 million that were variously outstanding, which most of them were in the process of being audited. They were on the other side of their balance sheet, they had government deposits in excess of 500, 600 million. Which they conveniently forget to mention or talk about, So if you net it off, and in fact, those deposits we haven't been able to retrieve up to now as government. So, these banks have been taken over or now maybe part of Consolidated Bank. And we are sitting there, and because depositors are a priority to us, we are saying, okay, fine. You sort out the depositors first. Government deposits that are there will hold on and wait till you've sorted out all their deposits before you address us, But so we, on the other side, have lost all this money. Can you imagine if on the back of that, we've also paid these so-called IPCs, which are not really theirs, but are the contractors anyways, we would have paid out twice, So we have a situation where we have to be very careful in how we assess these things in order not to be throwing good money after bad. If, sometimes the hole that has been dug is so huge that putting anything in there will not change the situation, and they'll continue to be insolvent.
But Honorable, can we establish that our committee then that there are still some arrears, and what is the plan in clearing the arrears?
Oh, there are arrears with regards to quite a few banks. I mean, it seems to be the business of the day. We are in a process, but some of them are not arrears from central government. Cocoa Board is a big one. They had quite a lot of road projects under Cocoa Board that, for some reason, Cocoa Board had become now a road contractor, a road, I mean, they were even paying for roads in Ashaman. The last time I checked, I didn't see one cocoa tree in Ashaman. So I don't understand how they became all of a sudden, an arm of the Ministry of Roads and Highways said we're doing all these roads around. So we ended up, when we came in, we realized that Cocoa Board had maybe 2-3 billion of road contracts, and we had to ascertain and verify and validate them, which is an ongoing process. The ones that have been validated have been paid. Those that are continually validated haven't been paid. There are some of them where, there seems to be some questions around the value for money. And in those cases, we actually have to go to the roads, take samples, determine if it was done according to the specs that was stated. And if not, then we have to look at the certificate again and adjust it, because there's sometimes that a road contract moved from Ministry of Roads and Highways, and where it was 70 million, by the time it got to Cocoa Board, it had ballooned to 170 million for the same road. And you ask yourself, why? Was it, maybe because the specifications changed, there was a variation in the scope of work, or whatever it was, or it went from a single lane to a double carriage? We need to know. And you can only find that out if you actually go onto and take samples and go for a lab analysis to understand. So it's not as simple a process as we say, as people seem to think it is. But the commitment is there to pay all IPCs as soon as they have been validated. And also remember that we are incurring an interest cost on delayed payments, because these things are not free. As the contractor, most of these contracts had a delayed payment clause. So the interest is building up, which we would have to pay in the end. So it's in our interest to pay it as quickly as possible and get these things validated.
Let me bring in Mr. Ndani. We'll be taking the social media comments, and then I'll come to our panelists who are here, so as the audience themselves very critical on that one. But Mr. Ndani, last time I checked the non-performing loans, which government says these are not direct exposure, but these are other contractors, was over 8 billion Ghana cedis. Are you worried about that one?
Look, I just wanted to make a quick comment on the IPC process, and I represent the Ghana Association of Bankers, and if I didn't comment on it, it would be totally amiss, and it's a conversation, ongoing conversation we have, I think, with our regulator and the Bank of Ghana. The interim payment the Minister of Finance, the interim payment certificate is a certified paper issued by a government agency that has valued jobs done by a contractor. Invariably, all these contractors would have picked the cost of the contract from their bankers. They would have picked their salaries of staff and everybody else from the bank. So to the point the Deputy Minister is making, in fact, in certain cases, because of delays in paying IPCs, even when the IPC is finally paid, the margin of the contractor is wiped off, and whatever is owed to the bank has to be written down. And even the average age of an IPC now, when I say average, from the point of issuance to payment, minimum now is around 18 months. And it's not just contract, it's not just road, it's including services provided. So let's not get into road contracts. It's just every government payment. So I think to the extent that government revenue is in arrears, what I mean government revenue, government collects their tax in arrears because they have to wait for the end of the month for us to pay, if we pay at all. We have to find a way to sit with government to deal with the subject of IPC, because I think one of the issues government wants the banks to do is to collaborate to ensure that the private sector becomes the engine of growth. The private sector takes off a lot of contracts from the government, and if we provide the money and the government doesn't pay, and an interim payment certificate takes 24 months, you're not just killing the contractor, you are killing the banks that have issued these IPCs. So it's a conversation we'll have to have and how we clear it. Just back to the MPLs. You see, again, I just like to establish that banks doing proper classification of their loans and advances and determining, to the point the Deputy Governor made, that on my portfolio, I have these assets that are bleeding incessantly, and I need to do something radical about it. And there are these that have wounds that I can put a bandage on, and there are some that I can happily roll onto the football field to play. So that's how we do it. So really having MPLs or declaring a certain proportion of your loan and advances book as MPL is indeed a very good banking practice. The problem that we've had is the delay in unearthing these things and giving it a proper treatment. So when you say it's non-performing, the central bank is taking action, your shareholders and directors are taking action, and you have special action against those particular clients. So it's not really the quantum, it's the discipline of declaring it non-performing, and the actions you now then take to ensure. So it's like a wheel, right? So there's a leakage. So the non-performing is a leakage. You try to plug that holes very quickly, but you got to determine the size of it.
Quick one from the Deputy Governor, Minister of Finance, Deputy Minister of Finance, quick one.
I just wanted to clear the air about this IPC thing before, it's become a chicken and egg situation. A lot of the contractors, knowing that government would delay in paying, build that into their quotation. So you realize you have a situation where, this road should be cost, 10 million to construct. They'll bid at 13 million or 14 million, and they all bid at the same 14 million, putting in there that buffer of 4 million because they've already assumed that it's going to take government 18 months to pay me. So we end up having the valuations or the contract sums be higher than they normally should be because of government's delays in paying. And that is a problem that we've identified, and we've realized that we need to address it. So we have to be a little more quick in paying bills. But how to do? It depends on the revenue. If the revenue is not coming, I have to find a way.
Like 3 months, maybe.
Oh, I would love to do that. You know what I mean? And, we are working on it. And another thing is also to use a more bidding process to offer some of these contracts, because that's where you then get the best price. Prior to us coming in, a lot of contracts were awarded on a sole source basis. On a sole source basis, you're at the mercy of the contractor. He doesn't have any competition. He will charge you whatever he wants to charge you. And then that even becomes harder to pay because it's a bigger number. When you put your bidding process in place, people bid against each other. They give you more favorable payment terms. They are more prepared to maybe finance it themselves and wait for payment at a later date because they want the business. So we have to use the Public Procurement Authority more to be able to ensure that in the future we have better value contracts, which then allows us to pay them more in a timely manner.
Quick comment from Madam Awaji, then I do the social media, and then I come to the audience, Madam.
Thank you. I just wanted to add to the discussion on asset quality of banks more broadly. I think everybody should pay their bills, their loans, right? Because it's the same money that goes around, and banks, the quality of the loans that banks have made really affects the strength of their balance sheet. We have provisioning rules. The Bank of Ghana requires banks to provision every year for every loan that they've given out, and how long a loan has been outstanding after it's become due and payable determines how much provision they must make. In fact, we're currently requiring the banks to write off all loans that have become unrecoverable over a period of time. And that hits their capital. It eats up their capital. Going forward, as you may have heard, we've asked banks to start implementing IFRS 9, which is a new accounting standard, requiring banks to recognize losses on loans even sooner. Why is that important? It's important because if banks downplay the poor quality of their loans and don't fully provision for them early, you find out that it gives an erroneous picture of their asset quality and of their profitability and of their capital. And so we're dealing with them, and even if they're being rated, we're seeing high ratings, but not recognizing that the fundamentals, which are their asset portfolio, is very weak and doesn't match up to the capital that they have. So we want banks to recognize losses earlier so that they can augment their capital sooner to be able to strengthen their balance sheets to do the business that they're doing. And so it's really about the quality of the assets on their loans, and we continue to encourage them to engage with the Minister of Finance about arrears that are outstanding, and we act as independent arbiters between the two. It's absolutely important for all borrowers to pay their loans.
Or something. So let's see what is coming from the social media platforms. We're coming to you live from Godian Tulip is live on Joy 99.7 FM and also on the Joy News channel on Multi TV. So let's see whether any comment from maybe somewhere in Toulouse in France. Philip.
Thank you very much. This is the first one from Facebook. It's from Ditches Amoroso. He says, Bank of Ghana is a fake institution allowing citizens to struggle over their own deposits at some banks. Why not educate and sensitize the populace, but sit dormant over issues and expect the banks to do their job for them? Please, Bank of Ghana, be active in your doings. That's from Ditches Amoroso from Facebook. Let me go to Twitter. And at Big Fell, that's his Twitter handle, Big Fell, he says, naturally, the Pareto principle of distribution. I'm sure he's referring to what Mr. Andani said about the 80-20% rule. And there's one that's very interesting. It's from Abdulaziz Pekakra. He's tweeting with the handle Apekakra. And he says, this discussion should bring hope in our financial system. And I'm sure I'll agree with him. After we can join the Deputy Finance Minister, he will sign us some checks and everybody will be happy. It will be good. So yeah, that's just for social media. So please keep the comments coming. The hashtag is Joy Finance Forum. Our handles Facebook, JoyBusinessGH at Joy 99.7 FM. And on Twitter, JoyBusinessGH and at Joy 99.7 FM. Remember to use the hashtag Joy Finance Forum.
Thank you very much, Philip, for those comments. Then we are coming to you live from Godian Chilip. It's live on Joy 997 on the Joy News channel on Multi TV as you look at after the cleanup, what is next for the whole financial sector. Let's extend our discussion to our invited panel who are also here. We're supposed to have a rep from the Bank of Ghana, National Insurance Commission, Ghana Association of Savings and Loans, as well as some other interest group, the capital market as well. Let me first start with Ken Thompson, if you're here, and Philip, if you can get the microphone to our extended panel here in terms of the assurances, the outlook. As a player, are you yourself so convinced and excited about the outlook? See, you written down a lot of notes. Okay.
No, I'm saying I've got the regulator, I've got a Minister of Finance, so I've got to be careful. No, but
so you don't lose your license as well?
Well, yes, I could. No, but I don't think they will do that. No, but seriously, I think the Bank of Ghana has done some good work. It's done some good work because Ebola broke out in our financial sector. And the thing about Ebola is you isolate and kill it, or it kills you. There's Ebola in the financial sector. And I can't speak for banks. I can speak for the sector in which I'm in, and I can speak for the economy of Ghana in general. Because I know that Ghana's economy is largely informal. And the institutions that lend to this informal sector are the non-banks. I can also tell you that over the last 12 months, as usual, I go out, we speak to our people that do business with us, we share our strategy, and there's still some concern. People are concerned. And I hope that the Bank of Ghana moves quickly to deal with the non-bank sector. And I'm glad that Elsie said that before I did, because there's concern. And we can see huge withdrawals. There are people withdrawing their money. Most of them are withdrawing even before the maturity. And I can understand the concerns. I mean, you have credit unions who have put people's life savings in institutions. You have some of the messages not being consistent. And people really are concerned. I mean, the number of people that come to me and say, Mr. Thompson, I have all my money with Dalex Finance. It's frightening. And I can see the withdrawals. And we've got to remember that no financial institution is able to pay its depositors on demand. It's not possible. Normally, you keep maybe 10% reserve for people that come for their money when it matures, because the money you take, you don't keep it in your bank account. You use it for loans. But that 10% now is being breached. And if we don't manage it, once it gets to a point where people are not getting their money back, they get more worried, and the panic spreads, and everybody's affected. And without a robust financial system, this economy will collapse. And I'm not too worried about the people that go to banks. I'm worried about the wachi seller. I'm worried about the people that sell granules. I'm worried about the cocoa seller, because all those people borrow for business every day. Some of them even pay on the hour. So my take on this will be to say the Bank of Ghana, and I know it's difficult, but it has to be dealt with quickly and decisively, or else we're all in trouble. And let's not take the fear people have for granted. these are real. I mean, I was in Takrady, Takrady, and the board, they were in tears. You know, people are in tears. Let's not take it for granted. So it's also an opportunity for us because we need to educate the public on how the financial sector works. And I think the media has a huge responsibility. When there have been runs on some financial institutions, the way you report it is critical. I mean, it's so critical. And we make statements and nobody's thinking of the consequences because there are even security implications. And I have to say that out of 10, I give the media 2. You haven't done a good job. You haven't done a good job.
Okay, thank you so much, Ken Thompson. This is the Joy Business Financial. Let me bring in the rep from the Savings and Loans Association, Chinebo Akodia. You were here. Your members have been accused of not being sticking to the rules and done other things. Some came into the business to do other things, and that is why we're having all these problems. What do you say to that?
Thank you very much. I must say that nobody's actually set up a business, and for that matter, banking business, to dupe people.
It looks like people disagree with you on that, but you go ahead.
Because is the case, the regulator wouldn't have given them license. And so there are certain conditions and the environment that needs to be made better. And as Ken said, currently the non-bank financial institutions are feeling the pinch. Any depositor is running away from the non-bank, but it is assuring that the government, the regulator, they are talking and assuring the public that the depositor will be safe. And we are happy about that. And we believe that this is going to give us a lot of lessons. Because going forward, we've learned that now the regulator is engaging more. Over some few years ago, it used to be like a taboo to talk to the regulator. And you wouldn't have gotten even the regulator here in this discussion. But fortunately now, things are improving. And fortunately, like the deputy governor here is trying to give us an audience to discuss the way forward, especially the savings and loans, the other non-bank institutions going forward. And we are grateful for that. The next thing I want to touch on has to do with this issue of the approach. Most of the customers that the savings and loans, the non-bank institutions deal with, do not understand something called receivership and administration. But if an institution is put under administration, this issue of fanfare that we announce loudly on air, as for ordinary person who are most of the customers of our institutions, don't understand. And so I'm of the view that some of these administration procedures like radical restructuring in the institutions could be done without even coming to the media, especially those ones that with a little information out, it collapses a whole lot. The other side is that we don't need to go back and sleep after this whole cleanup, where after we've spent all these taxpayers' funds, jobs have been lost, and the confidence level gone down and all these, we need to continue with the engagement. And to the various institutions, we need to continue to remain compliant. And of course, if you look at the savings and loans sector, there are certain environmental, the business environment that is unfavorable to them. For instance, if I cannot, I have to go through a commercial bank to clear checks and all this. This clearing system, the regulator has given the assurance that going forward, they are going to look at the clearing system and other permissible activities, of which we are very confident that if we tackle those systemic issues and operational issues, nobody will be interested in becoming a 400 million commercial bank, but will remain in the sector and work towards achieving financial inclusion.
do you want some kind of a tier system where maybe the savings and loans can be allowed to still do certain universal stuff but still stay in that sector? I know you guys are interested in FX issues and the clearing of these checks.
We all know that in banking, and that's where we are, is very critical. And we are hopeful that the regulator will listen to us so that going forward, some of the business environment we find ourselves. And I must say that the savings and loans sector is one of the best sectors that if anyone wants to even do banking, you should go there.
It's supposed the idea of dropping down. Thank you so much.
Chineboa
Kodia is coming from the Ghana Association of Savings. Let's show some appreciation for him on that one. On his thought that he's expressed, quite interesting one, of course. Let me come to those consultants, those who advise the banks and the training firms and all, and then I'll come to my panel again as you look at the outlook and they also respond to some of the concerns being raised. First, Nano Tue Champon, he's a banking consultant. I'll come to Mr. Tuahini as well, then other interest groups, and I'll come back to the stage. Nana.
Okay. On the issue of whether JoyBusiness Bank could be there after 31st
I can get
December,
a license from today.
Yeah, I've tried to look at it on a practical basis. The banks are required to publish their interims. And so come 30th of September, they started publishing, and we have started analyzing them. So far, we've got 23 that have published. Out of the 23, the greater majority, getting nearer to the governor's 20, have met. If you add their stated capital or their reserves, they've got the 400. So it's only a few. So if, unfortunately, you didn't find JoyBusiness Bank in there, so make sure that you get there. So the future is bright, that we will get the 2022 banks remaining after 31st of December.
Let me bring in Dr. Tuahini.
Thank you very much. I think my first concern is about it's going for the Ministry of Finance. I want to give you some figures, because those of us who do research, that's what we do. 2009, the CD to the dollar was 1.43. Today, I even didn't quote today. Today, I don't know, I think it's 4.76. If I brought 60 million cedis at 2008, would you find out it's now about $15 million? My issue is that I've seen all the microeconomic indicators that you're talking about, but I have never seen anything strategically being done to address this consistent and persistent depreciation of the currency. I take you back to the GDP, the current account GDP ratio. You've managed to, you brought it down to, I think, 4.7. It started from 19.3 in 2009. So, Mr. Finance Minister, I think what I want to find from you, what are your short-term strategy, the medium-term strategy, and the long-term strategy in addressing this persistent depreciation of the currency? Otherwise, the deputy governor in 10 years or 5 years' time will tell us to recapitalize where the capital has been whittled away by depreciation. So I want to see that from your policy statement in the next budget. What are you doing? If we don't take it, we'll be the Dutch diseases. When we have the oil, we'll take our eye from the productive sector where we can export strategies that would help us to address the imbalances. Now for the governor, deputy governor, I think you are on course for the policy directives that you have come, the capital requirement directives, which is very good. And more importantly, the corporate governance that you are looking at. Let us please enforce it to the letter. Let us enforce it to the letter. Let us not change ways. Let us not succumb to the power that be. If the tenure has been set up, if the tenure has been set for a board chairperson, non-executive directors, CEOs, I've read the directives, I've read the transitional provisions, I've looked at the fit and proper test, Every issue that you have sent, I have copy, including the capital directives. So please, if you follow it religiously, I believe the robust banking sector, you are all yearning, with the support of the Minister of Finance addressing the depreciation of currency. I bet you the next 5 years, we'll see a very resound and resilient banking in Ghana. That is my take for you.
Thank you, Dr. Tony. Let me get quickly back to the panel here. Dubois, respond quickly to some of the issues. We'll come back to the governor, get to the audience, and then back again as we look at the outlook for the whole sector. Yeah. You are. We'll change the mic for you. Don't worry.
It's working out. It's working out. Yeah, thanks for all your comments. Ken, I think I agree with you about the communication and PR and responsible reporting. It's fundamental importance with regards to the finance sector especially, which is a sector that is based on faith. And so, you know, if you destabilize people's faith, you know, things happen. And so, but I also appreciate the fact that as a media house, you know, sensationalism is the name of the game, you know. Bad news sells, you know, good news doesn't sell. So you always have to weigh the balance, but you always have to sort of think beyond, you know, the viewership and your ratings to the impact or the potential impact of what you're saying and what you do and the kind of message it sends out, especially in this environment where we have social media and news travels faster than the speed of light. And, you know, nowadays, before you can't pull it back. As soon as you hit send, you know, it's gone. You know, and in India, there have been cases where, you know, there have been issues on social media where they've spread some stories that has led to deaths happening, you know. And so you can see what happens when, you know, a story is reported that has ramifications and, you know, maybe it's exaggerated, and then before you realize there's a ripple effect. So, you know, just as we have a role to play, media has as well. So let us, you know, all come to the table on that one. With regards to the strategy on the savings and loan side, you know, I really agree with you that with regards to savings and loans, there's a role for them to play. But there's also clearly a lack of corporate governance structures within the savings and loan sector. I don't think it is by accident that most of the banks that we've had to move on were savings and loans that upgraded to banks. Clearly, they changed, they upgraded, but did not adopt the structures and the regulations and corporate governance practices that are prevalent in the banking sector. And we're still trying to do things the old-fashioned way. It didn't work, and they've paid the price. So, you know, in that transition, there should be a clear understanding that this is a different business. You know, it's a different market, different customer base, different structures should be put in place. And if you don't move with that understanding, you know, it might not work. I don't know why everybody is obsessed with becoming a universal bank. As you said, there's a lot of business in the savings and loan sector, and I think if you adopt some of these, you know, digital type solutions, you can do a lot more without having to spend so much on bricks and mortar. So that is an area where you know, I think it shouldn't be seen. In fact, previously I said the word that you can downgrade. I don't even see it as a downgrade if you went from a bank, a universal bank, to a savings and loans. There's a role for everybody, even as well as rural banks and all that. You know, so we shouldn't think that is any different. On the currency depreciation, that is one that. It is a consequence. First and foremost, our currency is free floating, so we are subject to the market and market conditions. But we also have some arbitrage type situation in the economy. And I'll give you a classic example. I think oil imports account for maybe about 20% of our forex needs or our forex needs. Now, if a BDC wants to import oil, a cargo, I think a cargo of oil is about 30 million, maybe, and Daniel knows since he finances these cargoes. But let's say they want to import a cargo of 30 million, 25 million, 35 million. Oh, I was just off by 5 million. Times have changed. You know, the price is over 75 now, so that's why. So what would they do? Like the CFO will call 5 banks and say, Charlie, I'm looking for $30 million. What rate can you give me? Those 5 banks will then go into the market looking for 30 million. Someone sitting in Bank of Ghana would think that the demand is for 150 million because it's 5 banks. But actually, it's only 30 million. You know, but because there's no one platform where we all trade off of, we don't know what the real demand is. And so demand might be artificially high, but it's not really the case. And in that sense, then the supply will have to, what adjust? I mean, the little economics that I did, they said, you know, demand and supply is the price that you use to balance the equation. So then the price changes. And, you know, it's always, because we are a net importer, basically, in terms of exports versus imports, we always have demand for hard currency outstripping supply. So until we change that fundamental import-export mix and we start to eat a lot more of what we grow and start to, you know, build things here rather than import, we always have that imbalance. And if you have that imbalance, you have to make sure that you have a common platform where everybody sees everybody's trade, so you narrow the spread and the arbitrage position. And we are looking at a solution of that sort where we'll have a foreign exchange platform, at least starting maybe first with the oil industry, so that, you know, anytime they post a bid on a platform, everybody sees it, all the banks see it, Bank of Ghana sees it, and so that way you can match the exact demand to the exact supply, and you'll be able to reduce some of these pressures on the currency. That's the first step. Second step on a longer to medium term is really to change your import-export mix. You know, we might see a position where we are net exporters because of the oil receipts, but those oil receipts don't really sit here. You know, we export now. Oil is quite a substantial amount of our hard currency earnings, but those sit offshore. So really and truly, they don't help in terms of the availability of hard currency to finance our imports. You know, and so we actually import, in terms of oil barrel equivalents, we import 6 times more than we export in terms of the revenue we actually get from the exported oil. So that also creates a problem, which hopefully we can address with some of these platforms. If we start to, you know, manufacture more, grow more, I mean, we have such fertile land, and we don't grow anything. You know what I mean? We don't have commercial farming, we don't have mechanized farming, we don't even have policies that encourage the agricultural sector, you know. And I mean, even the statistics to understand who's doing what and who's growing what, we don't have. You know, so we really need to encourage all these things that will help us build the resilience to be able to protect our currency. Or we decide that we're going to peg our currency, and that's a whole new ball game. But we have to decide. So those are some of the things that I can talk about or would like to respond to.
Let me bring Deputy Governor Madmawaji to respond to some of the comments and the concerns that were raised.
Thank you, George. So thank you for all the comments that are coming in. I'm glad to hear Mr. Ken Thompson agreeing with us that we have ring-fenced, you know, the wounds, the deep wounds, or the Ebolas, as he calls, in the financial system. That was a necessary step, as painful as it was. And, you know, the rest of the industry, of the banking sector, is better for it. Some of the pain is reflected in what we're seeing in the other deposit institution sector, like the savings and loans and all of that. And you can imagine what would have happened if we hadn't taken the steps we had taken. After saving deposits of about 11 billion in the banking sector, you still see some deposits in the savings and loans wondering, well, are we going to be okay? Are we going to be okay? What would have happened if we hadn't saved those? And so we've taken the first necessary steps. And we're going to continue into the other sectors very quickly. It takes a lot to plan. and even understand what is going on. And one of the things, this dovetails into your point, about the business models of savings and loans and whether the current business models are viable or not. I mean, we have promised that we will look at the permitted activities we've allowed savings and loans to engage in, and we would have that conversation in due course. But mind you that you cannot operate as banks and not keep the capital that banks keep, and not meet the more stringent regulatory requirements that banks meet. Otherwise, you will have what we call arbitrage, regulatory arbitrage. So you have much less capital requirements, precisely because you're not doing what banks do. And the licensing for your sector was issued, the licensing regime was created to promote financial inclusion, to reach persons that are not already in the banking sector. So it's a very specific mandate, and it's not meant for FX dealings and others. Otherwise, you really should be banks and and comply with the more stringent requirements that they comply with. But one of the things we're finding as we prepare as we understand what's really happening in your sector and what to do about it, is really the interrelationships amongst all of you. So what was essentially meant to be a business model that takes small deposits and grants loans to those depositors has become something more like an investment scheme, where savings and loans companies take deposits, sometimes from even banks, unfortunately, not small depositors, take even wholesale deposits and place them with other savings and loans institutions. So you find a number of savings and loans, and all they've done is take money from here and put with this. So each one of them owes the other. That's such a huge systemic risk you all have created for yourselves. So you touch one and you've touched everybody. Because this one owes me, and you ask them, why haven't you paid this? They say, well, but they also owe us. And it's just very confusing to try to even net off who owes what. And I'm thinking, that's not what you were doing. In one case, one savings and loans, looking at their books, the loans are in the amount of 40 million. And placements with other savings and loans are running into the hundreds of millions. That's not what the licensing regime for savings and loans was meant for. So this is part of the complication that you all have created, and we're trying to understand just how, we get into the bottom of the situation. You have to understand, a doctor goes into the wound, has to understand what's going on, what caused it, what's the current situation. If you try to excavate this wound, what veins are around it? How is it interconnected with other organs, with other parts of the body? Just so we get a better handle on things, and then put in place measures to address the system. What we do is not to kill the system. We take out what's bad and create something good out of the rest. And it's so important to understand the nature of the issues, and so that's part of it. So we'll engage with you about the way forward, but it's important to understand what you've all done up until now. We continue to assure the public that we're not about to bail you out, the shareholders of these institutions and the management and directors that have done what they were not supposed to be doing. We care about the depositors and the deposits that are at risk, just so that they can get some relief, and then their dealings with the other financial system can also be preserved, because one bad problem can create bigger problems for everybody else. Let me see a couple more questions. On communications, yes, we're doing more of it, and thanks for acknowledging that, Mr. Chinebwakodia. We're also taking public education more seriously, and we've done a lot, and we will do even more going forward. Nanotuo, okay, I think it was just a contribution.
I'll be coming.
Can I just answer one more thing? I think Mr. Tuahini wanted to find, you talked about enforcement, and we're very much on the same page. We're committed to enforcing each one of our directives, particularly our corporate governance directive and fit and proper person rules, because these have been at the core of some of the problems we've seen recently.
I'll be coming to the audience very soon for the various interest groups that are here to take questions from them. But, Honorable, the finance minister spoke about the fact that they are in discussions with the Bank of Ghana on dealing with the depositors of these savings and loans. And you even spoke about that in the BFT as well. What's the state of these discussions, and when are you going to advance the funds to the Bank of Ghana to deal with the depositors of the savings and loans?
Shouldn't that question go to the Deputy Governor?
Okay, maybe who signed the check, who's receiving the check? The signer first. Yeah.
So I should go first?
Go first before her.
Oh, okay. Yeah, we've been, actually, we are very committed, as I said previously, to resolving all the issues within the financial services sector. Savings and loans, MFIs are next. And we've had discussions about trying to identify, how deep the wound is, to use the analogy of the Deputy Governor, and how much it's going to cost to do that. But then there's also the issue or the question about the delivery mechanism, because unlike with the banks, you're dealing with hundreds and thousands of depositors, in small amounts, so it can become an administrative nightmare. So we are considering the best vehicle, I think right now the thoughts is around maybe trying to use one of the institutions to use, which has a wide branch network, to be able to use that to deliver or repay depositors, I think the study showed that the average deposit was 300 cedis, Elsie, was that it? That would be 500 cedis. So you can imagine, it's quite a lot of, people that you can envisage or picture long lines in front of some places, if we don't do this well. So we have to coordinate it well. But we are ready. We've got the checks. In fact, the World Bank, recognizing what we are doing and wanting to show their full support, increased the budget support they usually give us from $150 million to $250 million. So that's an extra 500 million cedis windfall that we hadn't budgeted for. So that also helps us in terms of coming up with the check.
Let me come to Madam Awaji, just like that commercial that said Nasikanu Wayne, now the Sikan Abba, so you're assured. Or the Sikan Erba, let me say that, so you're quite assured.
The minister needs to show us the money. But that's only one consideration. It's even more important that we get it right. And like I said, speed is important, but it's really important to understand all the ramifications, particularly because some of these customers are really at the bottom of the ladder who have no other access to the financial services that these institutions offer. So we really want to make sure that we're not just dealing with institutions, but also doing it in the way that mitigates the potential impacts, socioeconomic impacts of these actions. And so it takes time to calibrate it right, but we're very committed to doing it as soon as it's practicable.
Let me turn to the audience for question, and Philip, you help me out. I'll see Kofi Capito with the consumer network here, but be as brief as possible with your questions or contributions so that we can get everyone make very quick comments and get them to respond.
I would like to tell the Deputy Minister that sometimes good news also very, very sells. You tell me tomorrow that you've taken away VAT. See how Ghanaians will enjoy. I'm here because depositors are very, very worried, especially in terms of information and transparency. I'm going to dwell on this thing that Ghana has taken, which is allowing Ghanaians to open foreign exchange bank accounts where the depositors don't have a lot of the information. When I take what is referred to as mutilated dollar note to my bank, they will tell me the Bank of Ghana will not take the note, they will set it aside against them. I don't know that. Okay. There's no way that a bank should not take a mutilated note. That is what they are there for. Whether it's CD or dollar. If you're not ready, don't allow me to open a dollar account. Because I will not be stuck with a mutilated note. Number two, when somebody transfers money to my dollar account here in Ghana, or any business person, and you go to cash it, you are then hit with a fine between 1.5% to 2% because they say you are taking cash out. But when I send money to anybody overseas and I pay the fees from Ghana, the person is not charged any extra money because you claim that the money hits and you need to go to the market and go and find the money or buy the money. Information is very, very key. And when the depositor does not know about the fine prints as it pertains in a lot of corporate dealings, it makes the depositor very, very worried and very, very concerned. So, lastly, I would like to ask, ideally, the Deputy Finance Minister is here, the Deputy Governor is here, I'm sure a representative from the Securities and Exchange probably is here, on this men's gold issue. When is consumers or depositors going to know that it is finished? You can't leave us in the limbo. We don't know whether the man is doing business or he's not doing business. A lot of things have happened and we've been told and we've actually licked our wounds and move on. Okay. So please, let us know. Thank you.
Thank you so much, Kofi Capito. My producer tells me I have 15 minutes to wrap up this program before midday. I leave 5 minutes for my guests my panel to respond as well. So as snappy as you can, I think you will help me so much so that we can get some good conversation going on. So be as brief as possible, please.
Okay. So my name is Alex. I represent the Capital Market, Ghana Securities Industries Association. So 2 points I would like to make. First of all, I think that the central bank should be applauded for this kind of action. You don't typically get that enforcement culture in the society. They've done well. Second thing is, and that's a little niggle, there seems to be a disconnect between the messaging and the reality on the ground. What do I mean? If you have an investment firm that is exposed to, say, CBG, what you've been told is that depositors have been guaranteed their money. But if your client wants his money and you go to CBG, they'll tell you they've not been given the cash. They've been given a piece of paper. So that question actually goes to my brother who writes the checks. So there's a disconnect. The public doesn't know that it's actually a bond. It thinks it is cash. Can we find some convergence between the reality on the ground and the messaging? That would help.
Thank you so much. I see my former lecturer at Legon here, so let me do her the honors, Doc. She's here. She's going to, so that when I come back again to do my PhD, you would pass me.
Okay, thank you. Just a quick one. I like the fact that the BOG has taken the effort to secure the depositors because that works for financial deepening, inclusion, etc. My worry, however, is what steps are we putting in place to ensure that the banks don't take that as an angle for excessive risk-taking, because it means when I take the risk and I collapse, then BOG will hug. So what are we doing to ensure that 5-6 years down the lane, we don't repeat this saga where certain decisions have been taken that don't necessarily inure to the benefit of depositors and financial inclusion? Thank you.
Can we do one last one and come back so that we can, oh, yeah.
Hi, my name is Ajwa Boateng. When you look at the whole ecosystem, we have the players represented here. We have Bank of Ghana, the regulator, we have the policy makers, but I see one key player missing, which is the auditors. They are a key player because, you know, they are the gatekeepers and they provide independent review for these companies. I think it would have been nice if they were represented here to give their take. I mean, back in 2001, when Enron collapsed in the US, Arthur Andersen also went down, and probably because there was no confidence in them. Going back to the banks, I think that the whole agency theory was completely violated, where the shareholders were the same as the directors, and so when it comes to decision making, you know, the whole thing was, you know, possibly flawed. You look at the employee, the hardworking employee, who, when these things happen, is thrown to the back of the line. Some clients or customers who had no intention of, you know, paying back the loans they took. When you look at the whole mix, all muddled up. And I think that in this part of the world, we all attend funerals. There's possibly nobody here who has not attended a funeral. And when you go, you comfort the family and say, rest in peace, RIP. Now, I want to use the acronym RIP, where R stands for restitution, and then investigation and prosecution. But I've twisted it around a bit. I think that in all of this, where we find ourselves now, we must do proper investigation involving all the players, because, we have to look at everything all together. And then following that, we do restitution. I heard that, just on this platform, that some money has been allocated, about 8 billion or so, taxpayers' money. How about those who are the shareholders, the directors who are involved? How about their assets that can be retrieved to, defray these liabilities that, have been incurred? We have to look at that too. And then lastly, prosecution, where people who are guilty have to be prosecuted. And then finally, those whose names are dragged in the mud be exonerated. Thank you.
Philip, let's see whether we can still do more questions and as brief as possible, and then we'll come to our panel to, So very brief, please.
Okay, my name is Akofa. I'm a microfinance practitioner. I'm a banker by profession, so the issues of bank also concern me. Now, I just want to touch on the issue of MPL. Now, when we talk about the capital structure, as the Deputy Governor has mentioned, the MPLs affect the capital. Now, if the government, who is the easily allocated person, is owing these institutions, and the communications are not done such that the chicken and egg situation of getting the government who is easier, you can locate the government easily compared to the other customers that the bank cannot find. The government is there. They can just get the government, have the conversations, and get the monies to the banks first before even touching the other issues. How do they expect these banks to chase the customer who is far away with our system that we cannot easily locate people? The government is there, physical. You can meet the government and have discussions.
Go after them. Thank you so much on the one, Philip.
You understand my point?
I do so much, ma'am. Thank you so much. Let's have another questions and let's see whether we can wrap up in the next 5 minutes, please.
Thank you very much. My name is Kwaku Diabechi, GASALC, Association of Savings and Loans Companies. I think the theme, we mentioned that the course, was it just one course or courses? That's a rhetorical question. Okay. Now, the other issue is with respect to the panel. I never heard clearly the causes that brought us this far. But I heard a lot about the costs and then the cleanup. Okay, with respect to the cleaning up, it's good for us to clean up, but I believe that a lot of times we assume things without necessarily understanding the fundamentals. That is the causes. Corporate governance comes a lot. But just as Mr. Andani mentioned, there are 4 constituents, and 2 of them are with the state. We have the policymakers, and then the regulators, and then the supervisors. What roles did they play? Okay, with this. And then we come to the institutions, and then the general public. So these are some of the issues that I wanted to hear. So if they can just let us understand. Thank you.
Can we do just one last question and then come to just 10 minutes to wrap up. We are live on all the networks on the multimedia platform. So let's have the last question. Then I come to panelists here. Go ahead, sir.
My name is Thomas Savoji from Vasco Consult Limited. My sister talked about NPL, non-performing loans. Now, on one hand, we know that, correct me if I'm wrong, there's a policy that in the banking system, after 6 months, there are buckets. Maybe when the loans are late in 30 days, there's a certain percentage that is provided as a bad debt until it hits 100%. And then currently, we have also learned that the average repayment from government is 18 months. So if even the 180 days is wrong, and then we are even taking in 1 year, then it means that majority of the loans are going to be classified as NPL. Do we have an exception to some of the loans, or we will always have to write a recovery account? Thank you.
Okay, let me come back to our panel. Mr. Dubois, let's start with you first with the issues that came with respect to government. Because you signed the checks.
George, George, me and you will have a conversation after this. Men's gold issue and the mutilated notes. With regards to mutilated notes, I think that is a Bank of Ghana issue and the bank, so I'll leave that alone. Men's gold issue, I think the end is here. I think it's clear. People might, I don't know what it is, but it's clear he's done. And I think what has to be happening is for depositors to be repaid their money. With regards to the disconnect Alex referred to with regards to the public sector and the CBG issue and the bonds, I mean, first place, there was a cash element. There's bonds and cash. We capitalized a new bank. We wrote a check for 450 million cedis. That was cash. The bonds that were issued can be monetized. And I think either they have or they're in the process of monetizing a bond. But we also have to understand the moral hazard issue, which the lady referred to. You had people who, I'm proud to my joining the government to do my national service. I used to run an asset management business. And 4 years ago, there were some of these banks that you didn't do business with. We had, it's a rule that you do not put deposits with these institutions because everybody knew that they were in a bad state. So people, especially the informed investors who represent institutions, clearly knew what they were doing when they put money with they placed money with these institutions. I guess they were attracted by the very high attractive rates. But nothing is free. There's risk is commensurate with return. So you should know the kind of risk you are taking. So those institutions, CBG has decided that, look, either you take a haircut on the interest that you're expecting, we'll make your principal will recognize and make you whole on it. But you can't expect us to pay you the interest because a lot of people were just rolling over their deposits because the rates were so attractive. We can't expect us to pay you those fat interests that you're earning then. That would be unfair to the taxpayers who are shouldering this burden. It's like you decided to go and, play cha-cha with your money. Now there's a problem. You expect to be made whole. I don't think it is fair. So we have had to try and renegotiate some of these fixed deposits and it come to some arrangement where, as a depositor or as an institutional depositor, you are made whole, but you don't get the, those returns that the bank was promising in the past. So it's a delicate balance, but definitely, we've provided the liquidity to address, the withdrawals. Why are the auditors in all this? Excellent question. I believe that the auditors should be held accountable, And in fact, 1 or 2 audit firms kept coming up with a lot of these banks, and I can't believe they passed these accounts. Anywhere else in the world, they'll be blacklisted and struck from the list. You can't, take audit accounts that have been audited and has a stamp of an audit firm, a reputable audit firm on it, and they do not represent the true state affairs of the institution. You can't be allowed to get away with that, they should be really held accountable. It's not my role to do that. I don't believe so, but I think that, that question has been raised and posed, and, sooner or later, I will get around to them. the bank shareholders and also being clearly, there was really a moral conflict there. All kinds of agent principal issues were violated, directors, shareholders, and borrowers. I mean, I wonder what their credit committees look like, and how they determine who gets a loan and who doesn't. How did the industry become that bad? I don't know. I mean, but really, it had really, really degraded, and it just had become a circus. And it's funny. I sit in my office and I have some very angry people come in and say, "When am I going to get paid? When am I going to get paid?" You come into government and you inherit problems that were incurred in the past. You can't go and say that, "Oh, this one is not my problem. It happened before I came." It's become your problem. So we have to solve these issues. But they were there, and things had gotten really bad, and we are addressing them, and we are trying our best to do so.
No, but I want to come to the governor, but just 1 minute on, there was a lot of giggling in the room, the clarity on the men's gold issue that no bailout for them, or let the regulatory agencies deal with them, or what? I mean, I think that some clarity on that one.
Okay, I'll let the deputy governor handle that. But from what I understand, from what I understand, men's golds came under the SEC regulations, and what they were doing was considered to be trading, and they did not have a license to trade. So in the current capacity of what they were doing, their license has been pulled, and they have not been able to provide any proof and evidence of why it should be reinstated. So as far as I'm concerned, from what I understand from the SEC, they are not allowed, or they do not have a license to trade and therefore indulge in the business that they were doing. However, nothing prevents them from paying depositors back their money.
Let me come to Madam Moyo.
Is that clear enough?
Yeah, maybe.
Okay.
We'll continue after this discussion.
A couple of questions that have come up that I'll take on. But I think I left out one of the questions that Mr. Shunibu had asked about why do we announce the regulatory actions we take against banks. We work within a regulatory framework. We should not announce. Well, I was coming to a point. We work within a legal framework. The legal framework gives us the powers to act, and it spells out how we use those powers. And it is very clear that when we take those powers, we announce them for the sake of the public. And Mr. Capito made a point about how transparency and what people need to know, so that they know that this institution is under administration. They can form their own choices as to what they do with it. Or this institution is under receivership, and that's what they need to do. And we don't just use these big terms. We go on the radio stations, speak all sorts of languages, local languages, to explain. I've tried explaining receivership and official administration in Tree on Peace FM. Okay, so we don't just stay there. We try to break it down to them, but the law requires us to announce them for very good reasons. So let me go to Mr. Capito, who I don't see after he asked his questions. But he talked about transparency and information sharing to the public, and we're like we said, we're increasing our public education efforts, and we will do more of that. He talked about foreign currency, about notes in general. We have a policy on our CD notes and the level of cleanliness that we want, as a result of which we don't want dirty notes circulating in the system. On the foreign currency side, these are currencies of other jurisdictions. They have rules about what claims they will make good on. If we take a currency note, a US dollar note, which is so mutilated that you cannot even verify the security features of it, we cannot be made whole by the Federal Reserve. And so there are rules around these, and that's why some bank may reject it or the other. On men's gold, the Bank of Ghana has been in the news, has over the last year and more, issued several public notices explaining what our views were on the activities, 2 years, thank you, on the activities of men's gold and on what we felt, what our advice to the public. We did that, and we also stated that anybody who dealt with them did that at their own risk. Now, the matter is in court, and I won't say more about it, because as you know, men's gold has the Bank of Ghana and the SEC in court over the current state. And so we'll leave it to the judges to deal with. But let me just say that we had issued ample public notices about it. Mr. Siedu of the GSI, Ghana Securities Industry Association, talks about the disconnect. And while all deposits were guaranteed by government, there were practical issues, including the fact that some of the failed banks had not kept their records well, or had commingled bank deposits with investments held with their affiliates that were fund management companies. And so even the process of verifying these claims, if you came with a piece of paper to say, well, I put my money here, was it with the bank or was it with investment house? And what does it mean? And so there've been a few practical issues that have had to be dealt with, some of which delay, like Beige Bank, you know that. There was even an announcement that some accounts were frozen because there was just a commingling of banking deposits versus investment accounts, and it wasn't clear as to what was being paid. So some of that happened. But the bond that was issued to CBG has been securitized so that they have upfront cash to pay claims, and they've done a lot of that already. Moral hazard, which I heard a lecturer from the University of Ghana talk about, basically her concern is that won't we encourage banks from these bailouts, knowing that, well, we can do business and run away and leave the taxpayer, to carry the pan. That's not the idea. And so I would say that we're not bailing out shareholders. We're protecting deposits. Because of the systemic nature of those deposits. If you didn't save them, the whole system was going to blow up in your face. And that's what we did, and also to save jobs. And I talked about 11 billion deposits that were saved, about 3,500 jobs that were saved. Now, it doesn't end there. The principle is really that we need to recover so that we go after shareholders and others who had taken money from the banks. So ultimately, the taxpayer will not be the loser. And like I said earlier in my submissions, there are a lot of efforts out there. PwC has already recovered 400 million from people who owed the two banks from last year. There's a lot of that going on. We've passed on dossiers, and this answers your questions as well, Ajua. We've passed on dossiers to IOCO. Interviews and investigations are going on. So prosecutions would happen after that process. Unfortunately, we don't have prosecutorial powers. So we have dutifully handed over. We continue to assist the state agencies so that they can take the necessary actions. But we're not trying to encourage bad behavior. As a result, we're going after everybody who's complicit so that people know that there's a high price to pay for taking people's money and abusing the trust which they repose in you. It doesn't pay to do that. On that note, I think...
Thank you so much. We all too soon have to draw the curtain. But let me give the last word to Mr. Ndani, a minute outlook for you. Sound, safe, you think that you're quite assured about all these things that you hear from the policy and the regulatory angle.
I think the future can only be very bright. And just to respond to our lecturer on the moral hazard and using the 80-20 rule, that the 20% of the banks that control over 80% of the loans and advances run very tight asset liability management committees. And there's absolutely expectation. We want to run sustainable businesses. We do that. And also the fact that this conversation we're having is, let's say that with 18-year-olds, we're going to have another conversation with 25-year-olds, that when we implement the deposit insurance scheme, I think the point the ministers made and the governor around rating should be looked at very carefully. I don't think that Ghanaians would be expecting, 5 years down the line when the deposit insurance scheme has taken hold, that when there's a bank failure, we can have 100% underwrite of deposits. We will not have that. And I think the earlier we say that, the better. And the law is already out there. So every analyst, every researcher should go and have a look at it, and clients should go have a look at it. That, when that takes hold, there are very strict lines on what the insurance scheme will pay out when there's a failure. So the moral hazard issue is not a big one. Just very quickly to say that, information, of all the economic factors, the most cowardly is capital, and therefore the way and manner we manage information is very, very important. If we don't, the first thing that flies out is capital. And therefore, to the point Mr. Thompson and everybody has made, we appeal to the media to be very circumspect and very professional in the way we manage it. Otherwise, you drive away the most important economic factor, which is capital, because that tends to be the most. I would have responded to a few of the banking questions, but my governor has responded to them.
Damawaji, 1 minute.
Just to say that, indeed, we're moving ahead with implementation of the deposit protection scheme. The first step was to clean up the banks. You can't have sick banks go into the scheme. So cleaning up and then rebuilding their capital, the corporate governance structures, the risk management frameworks. And then we have a cutoff date of September 2019, by which time the scheme will be fully operational. So we can look forward to better days, stronger banks, well-behaved banks, and other financial institutions, a strong financial safety net. And let me all say that we're all interested in rebuilding confidence in the financial sector. Trust was affected, but it's coming back, and we're working towards that, and we count on all stakeholders here to lend a hand in that effort.
Mr. Boy, can I give you 30 seconds?
Yeah, thank you. What do I have to say? I think we've done a lot of work, and but maybe we are not as loud, and we don't boast as much as we should about what we've done. But we've been very methodological and really thought carefully through the process. I have to give a lot of thanks to the people at Bank of Ghana. I think they have been very, very hardworking and have really focused on getting this done. And we should give them a hand of applause for that, definitely. And I want to reassure you all that, those of us in the line of fire are working very hard on your behalf. And we are really focused and committed to building a society and an economy that is strong and resilient. We have no doubt at all that we can't make this happen without a vibrant financial sector. It's the financial sector that provides credit to the private sector and to government, actually, to allow for innovation and entrepreneurship and productivity to thrive. So without that, it's like one pillar on which we stand on, it will be gone. And so we are really focused on making sure that it works. And we need your help. I mean, we need you to continue to have confidence in us and in the financial sector and support it to be able to recover quickly, because it's all about your support. If you panic, it won't recover quickly. If you're steadfast in your support and believe in the future, it would recover very fast, and this will be long forgotten, and we'll move on to better and brighter things.
Mr. Dubois is the Deputy Minister of Finance. Thank you so much. Alhassan Andani is the President of the Ghana Bank Association, and Madam Elsie Waji, Deputy Governor of the Bank of Ghana. If you're indeed positive about the outlook, let me also thank our extended panel who joined us in this discussion to have a very healthy one. If you're convinced about the outlook from what you heard, let me see your applause for these gentlemen and lady who are here. And I've seen a lot of people in here. Another lecturer of my Jonathan Welbeck is also here. He taught me a Legon. Thank you so much. And thank you, everyone, for being here. This is just the first of several engagements to be having with the regulators to assure us that, indeed, the outlook is safe. We're live on Joy 99.7 FM and also on the Joy News channel on Multi-TV and all the other social media platforms across the various networks. I'll say thank you so much and have a very, very good afternoon.
Super Hits Radio. Joy 99.7.